Greetings, YouTube friends. Today is March 19th, 2026, and I am very excited to be sitting with my friend Juan Villaverde, who is the creator of an incredible Bitcoin computer model that he built. And he has a Discord where he shares his information. And we are going to talk market cycles today. We're going to talk about everything from Bitcoin to crude oil to US equity indexes and why Astro works. So welcome, Juan.
Hey Margo, good to see you. Been a while. Excited to be here. Actually, I've been meaning to talk to you since conflict broke out because you're a better astrologer than I am. So, uh,
Well, I don't know. I think when we put our heads together, it's pretty magic though, because your models are just really outstanding.
thank you. And I wanna share with you the new stuff that I'm working on because thanks to AI, I've been able to I don't want to use this term, but I'm gonna use it anyways. It's like I've been able to decode and hopefully we get into what that means like decode how exactly one can correlate planetary movement to um, to specific cycles in a financial asset or really anything because I'm guessing I can predict politics with this stuff now. Um, and so that was the breakthrough. So I was like, how do you do that? And it turns out you can just take the sine of the angle that you're looking at. It's just basically trigonometry. You turn it into a sine wave. You turn planetary motion into a sine wave. That correlates with it remarkably well. It correlates with the movement in financial assets. It extremely well. I'm quite shocked, uh, to be honest. I mean, I thought it might work, but up until now, I was working with transits basically aspects, and I had a whole set of aspects, and I would like the classics. I think
Mhm.
the only one that I added that was like kind of out there was 72 and 144 degrees. I don't know what you call those, quincunx or something like that.
Well, it's the pentagram, right? The
It's a
72 degree.
pentagram.
Yeah, is the
Yeah,
pentagram.
because I know you read the book by this guy,
Bradley
Untitled
Callan.
Time Cycle. Yeah,
Yeah,
amazing book.
yeah.
And he uses the pentagram, so I thought, well, I have to use that. So up until now, and I had a lot of when you and I met in person, I had that one model that just relied on aspects, and that alone was pretty good. I wasn't satisfied. I wasn't satisfied because I knew that there was a lot of turning points that I was missing. And I had not reached my objective. My objective was to isolate each frequency in a price chart and correlate it with frequencies with planetary movement. That was the objective. I failed at doing that. This model was good, but it didn't do that. The
Yeah.
one that I created literally 2 weeks or 3 weeks ago, I think it was it was the last week of February that I created it. Uh, now this one does that. It
Wow.
isolates each frequency, and the forecasts you get are for that frequency and that frequency only. It does not forecast other things. There is some bleeding. Some cycles might bleed into others, but there's very little of that. If I give you a forecast for Bitcoin's 4-year cycle, that's what you get. Base, broadly speak, again, some bleeding, but the bleeding you get is actually pretty cool. That's one of the things I want to show you is uh, how it might bleed. Other cycles might bleed into that 4-year forecast, but it gives you a lot of color. It gives you a lot of context for what to expect. And so, yeah, exciting to be here. Excited.
Yeah, that's very exciting. I mean, I think that at the end of the day, the reason that cycles work is because the universal language is math, right?
Yeah.
It
Yeah.
it's one of the things that like just from a zoomed out from a philosophical standpoint that I I guess I just stand on is that there's really only one way of communication that you can go anywhere in the world, and 2 plus 2 is going to always be 4, right?
Yeah.
And so it makes sense that it's the math that underpins then the physics and the movement of all of the bodies and how they influence us personally, right? Because each yeah, there's like huge measurable shifts that occur when planets move into different positions, right? And then that can be measured on our human body. So why couldn't we measure it in the financial markets, right?
100%. I mean, I knew this to be true because I mean, you and I both know Ray Merriman. That's how we met. I mean, I knew this for the longest time that this stuff works. And honestly, I came across Ray because Gann was the first one.
Yeah.
WD Gann. He was, and before him, there were other people who were using astrology quite successfully to forecast markets. And I believe back then it was even more powerful because it was a lot less intervention into
Yeah.
financial assets. So you got pure pricing, which is why, fun fact, the most predictable asset for me has been Bitcoin. Bitcoin, I don't know why, but these methods work extremely well for Bitcoin. I believe because up until now, it was left alone. Nobody
Mm,
intervened when it crashed. Nobody did anything when it surged. And so it was pure pricing with no intervention. And so it's very predictable. Uh, I was telling you offline, the Hang Seng Index, the Chinese stock market. Now, I happen to know the Chinese don't really invest in stocks. They don't really own stocks. So there's
mm,
not a lot of reason for the government to keep stock prices high, as we know that the US administrations they do that because most of their tax revenue comes from that. So or a large part of it at least. And so stock up means government can get funded, stocks down means recession, and the government is and the deficit expensive. There's that relationship between government and the stock market, which they call the financialization of the economy. That makes that I mean just and this is not theory. Just pull up a chart of the 21st century, the 26 2000 through 2026 on the S&P. Compare that to the S&P or the Dow Jones in the 1800s. Very different. Compared to the early 20th century, very different. Compared to the 1970s, it's very different. There were more cycles. It was clear to see, it was more predictable in a sense because I believe this is just an interpretation because there was less intervention and the stock market was free to do whatever it needed to do.
yeah,
Um,
absolutely. I mean, if you just look since 2008, since the advent of quantitative easing, we haven't seen a bear market that lasted more than a year,
exactly. Yeah,
right?
exactly. We haven't
So
seen it. Yeah,
yeah. And maybe we will, but it's hard to compare current markets and the current conditions to pre 2008 situations, you know?
yeah, yeah,
I mean, it
yeah.
of course can be done, but I always have that caveat that it's very different now.
It
So
is very different now. You can still predict it. It still
yeah,
shows up,
yeah.
but the signal is somewhat distorted. And with the cycle isolation tools that I've used, I've actually noticed that the stock market does have so the long-term cycles are still there and they're totally muted. You don't see them anymore. Case in point, one of the last serious corrections in the stock market, I only understood once I isolated the frequency. There is a 4.5 year cycle in the
Hmm.
stock market, which is interesting because I found that using uh not facing analysis, it's called spectral analysis. So
Okay.
this is when you isolate frequencies. So spectral analysis, and I found that 4.5 year cycle, which is the same cycle that Hurst found. This is the father of cycle
Hmm.
of cycle theory, in my opinion, like as applied to financial assets. In the 1970s, he found a 4.5 year cycle in the stock market. And I thought I even recorded lessons on this. They're on YouTube saying this cycle is longer now. It's actually 6 years. Turns out when you actually use proper mathematical methods,
Hmm.
the cycle is 4.5 years. It hasn't changed. Now you don't see it. For instance, one of these 4.5 year corrections was January of 2018 through March of 2020. Now, if you look at that, that is an expanding triangle. The market did not fall in that period. It's an expanding triangle. As a psychoanalyst, you would not see that as a, well, this is a 4.5 year cycle correction. Turns out if you isolate the frequency, it is. So the high is in January of 2018, the lowest in March of 2020. There's two higher highs between those 2 points. So it looks like an expanded
Yeah,
thing,
yeah, yeah.
like
Kind of like a
this.
makeup.
Yeah,
That,
which is a
that's
weird thing that you should never see. It's not natural.
interesting. I actually learned the beginning of my interest in her cycles was from you, actually. We went to that Merriman retreat. That's where we met. And then when I took your course and I was just absolutely, I was like, this is the thing. This
Yeah,
is the
yeah,
thing
yeah,
for
it's the
me.
thing. It is
Um,
a thing.
and I did break down the 54-month cycle or the 4-year cycle, the Hearst cycle on the Dow Jones, and I actually wrote a report on it. And what I found that was really interesting is that the 54-month cycle seems to alternate between a 54-month cycle and a 31-month cycle.
It
And
could be.
so and that those kind of together, I did this whole thing where I ended up finding the Fibonacci series like embedded in the cycles because everybody wants to have an 18-year cycle or a 4-year cycle right? But it may or may not be. What I found is that those things exist, but they actually run in Fibonacci series. Like you can take if you look at all of the prior cycles, I went back to, let's see, how far did I go? 74? I mean, I went back to 1900 really. But,
Oh,
if you measure them, you get 74 to 2009 is 34 years. 1974 to 1987 is 13 years. 1932 to 2020 is 88 years and Fibonacci number 89, right? Anyway, you can just kind of break it down in a totally kind of different and unique way of looking at it. But anyway, we're kind of off in the tangent of the of how to break down your cycles, Uh, let's get to some current market forecasts and some charts. Do you want to share some charts first, or do you want me to share some charts? I could throw up
uh,
my Bitcoin chart real quick and show you what I'm looking at, and then you can tell us what you're looking at.
all right. Well, you're making this decision easy. Show me what you got. I know what I have, so I'm curious to see where you're looking at.
Okay. Well, that's not Bitcoin. Hold on. Let's get some Bitcoin up here. So this is my Bitcoin forecast here going forward. And for Bitcoin, I forecast using Venus intervals, and I use the 8-year Venus cycle primarily. Of course, I use lots and lots of other cycles when I'm dealing with the daily and weekly turns.
Right.
But this is the primary two scenarios that I have through August. And both of them indicate that it's highly likely that we're going to stay inside the range, right?
Yeah.
Because we have this huge range here.
Mhm.
And then, because I listened to your most recent AMA, and of course, not surprisingly, we have a very similar outlook, which is one of two things are most likely right now. Either we're going to just continue up into mid-April here,
Yeah.
or we'll come down and make a double bottom, or perhaps even wick below. It's possible, take out that support, and then
Mhm.
continue up again.
And
So
it will be in April, right? This higher low would be April.
exactly, that's what I've got it. So I've got the week of March 30th, which extends into early April.
Uh-huh.
Plus or minus 1 week. I always give everything plus or minus 1 week on there. And hold on, let's see. I didn't load my weekly ruler, but I measure planetary cycles in degrees. We were just chatting about this offline before we started. Your model uses calendar days.
Yeah.
I measure cycles with an indicator tool that is provided by the Time Trades Indicator Suite. If that's anything anybody in the listening is interested in, there'll be a link in the video description below. But I pick key dates based on other planetary cycles that I identify, one of them being the natal chart, and then others being major highs and lows in cycles, or in Bitcoin, I use the halving cycle sometimes too. And then I run key cycles. And these don't, like, if somebody looks at this, like, that doesn't make sense to them. They're like, why are you measuring 64.84 degrees of the Mars Jupiter cycle, right? Because that's not a
Interesting.
standard aspect. It's not, there's nothing that would automatically make you think that, right?
Yeah.
But I have all of these mathematical formulas that I run, some of them based on Gann work, squaring things, various different things. And then each one of these points typically provides a weekly pivot. That doesn't necessarily mean we're going to change trend, but it's a change in tone, right?
Okay.
And then when the pivots cluster together, then we tend to get periods of volatility. And when there's a space between them is typically where we see a directional move. Now here you can see we had one pivot here that came 1 week early, but I also always give them about a week orb. So I guess this is kind of the cluster setup then going forward, right? Is that we had a weekly pivot this week. So that would indicate a high. And then we have
Right.
another one. Actually, sorry, it was last week. And then we have another one this week. So to me, that's typically a period of volatility, right? And then the next one I have is the week of March 30th. And that's what's aligning with the analog that's based on the Venus cycle. And that's where I see a potential low coming in.
Interesting.
Yeah, I'd
Interesting.
love to see what you're looking at.
All right, let me show you what I'm looking at. I cannot show you the Astro stuff on my price charts because it's not there yet.
Yep.
But I'm gonna show you broadly speaking, you know what? You're talking about Astro. Let me show you what I'm looking at. So I'm gonna share with you a different tool. I'm working on this tool and I just wanna I'm very excited about this particular tool. So eventually it will be available online, but for now I'm still building it. So this is what I'm looking at. This is
I
what I
can't see.
built.
I can't see
No,
your
no, no,
screen.
no, no. Yeah, yeah,
Oh,
yeah. Yeah, I'm sharing. Just give me a minute. There we
patient.
go. You should be able to see it now. Can you see it?
Oh, well, it's trying. It's there. It is. All right.
All
That's
right. Okay.
cool.
Loaded. All
Yep.
right.
Loaded.
So let's discuss. So here on the left, you can see the cycles that I've identified as being dominant for Bitcoin. And this is a 5-day cycle, 20 days, 80 days, 320 days, 1280. These are related by a factor of 4. So if you take 5 times 4 is 20, 20 times 4 is 80, and so on. These are the cycles that I've isolated from the price charts. And what you're seeing here on the screen is this thing that I'm created that I call this is called a, I don't know what to call it yet, actually. But what we're looking at here is the declination of a bunch of planets. I can't tell you how many because it's 16 and I haven't looked. We can break that down if you want.
Is it a
Uh,
composite? It's a composite wave of the
it's a
decline.
composite wave. It is a
Okay.
composite wave that tracks very well with Bitcoin's 80-day cycle. So how do you read this? So
Yep.
the blue line, and I might change the color blue because it's blends with the background. The blue line is Bitcoin's 80-day cycle isolated. Every high and low is an 80-day cycle high or an 80-day cycle low. These are isolated. This is what you need to do prior to being able to forecast with the planets. You isolate the frequency. So the frequency is now isolated, and in orange, we have the forecast. And just to give you an idea of how powerful this is, well, you can see some alignment sometimes, and sometimes they're inverted. Currently,
Mhm.
on the 80-day cycle forecast, we are inverted.
Yep.
When inverted, that means that you can see that the high here, that the all-time high on October 6th showed up as a low on this model on October 12th. That's perfect because it has a margin of error, obviously, especially when you're smoothing out the frequencies. So this is perfectly fine. It actually identified successfully, said this is a top because we knew it was inverted because if Bitcoin is rallying and the thing is going down, hey, they're inverted. The next turning point, just showing you 2025. Um, November 22, November 22nd. That is actually the last 80-day cycle low. So I nailed that. It actually shows a high sometime in December. The
Mhm.
actual high is January 14, a little off there. But basically, the path that Bitcoin followed is shown here, as in Bitcoin topped in October, it bottomed in November, high in December, which is actually January, that's fine. Then it shows a low in February. By the way,
Mhm.
every single model, because there's a lot, you can see that there's declinations, natal, zodiacal, and within those, I have, well, in this case of Bitcoin, I have 2 methods for isolating the frequencies. Pretty much all of them showed February as a bottom. So I was pretty confident. Okay, February is definitely low. All the models agree. The next date that I'm looking at, though, so we have the February low, that's already confirmed. The next date I'm looking at is actually, it rhymes with you. It's March 21st, March 20th. It's this low here.
Mhm.
Now, there's one of two ways to read this. One could be, and I don't know yet. Unfortunately, I just don't know. If we assume the model continues to be inverted, then we already had a high. I believe we had a high a couple days ago on the 16th on Bitcoin. So this would be a top with the low being on May 8th. I don't favor this view at all. And the reason I don't favor this view at all is because it doesn't line up with macro indicators that I'm going to show you in a second. Actually, what I think is that March 20th is a low. Not an important low on this 80-day cycle. This is an intermediate low. This is the bleeding that was I don't know if we were offline or online, but I was telling you about. There's some bleeding. No, we were recording. There's some bleeding between the cycles. So this shows some of the prominent 20-day terms. So the next cycle in line, this forecast, which is why I like it. I like this color. And so we're showing a low sometime, funny enough, March 20th. And the reason I think this makes sense is because the war broke out when Mercury turns retrograde, which obviously they're not looking at the plan. You don't start these things when Mercury is retrograde. Literally means things will not go as planned. And lo and behold, they did not go as planned. Um, there's a lot of confusion right now. In fact, this is one of the worst Mercury retrograde periods I can recall recently. And a lot of what you can say about the conflict is confusion. Like nobody knows anything. That's not specific to the conflict, I think. This is because we're in this confusing period, which this model shows as ending around the time that Mercury turns direct. Then the next turning point should be May 11. I believe May 11. Might be a little off. I'm favoring this view now more than the other. Not the declinations fitted. I'm favoring this view a bit more, which shows a bottom here. You can ignore that, and it shows a high sometime on April 20th. What I'm trying
Mhm.
to say is we have been inverted on this model. I believe we're going to flip positive, which
Yeah.
typically the correlation is positive. So if I go back to what I was just showing you, this low here should not be a high. It should be a low. It's time for us to return to the normal correlation. Bitcoin is falling into this date. So I believe this is a key low, probably key. And then the next high is going to be sometime on April 20th. But for that, I need to stop sharing my screen and show you the macro stuff.
Yeah,
Because
I think that's fascinating. I love your new model that you're working on. I would tend to agree with you. And something that I've worked on because forecasters um have been dealing with inversions, since the begining of time. Gann
yeah,
talks about it, all forecasters talk about it.
yeah.
And so the question is what causes the inversion? And that's that I have a few speculative ideas, but have you done any like research or built any models that might try to find an inversion factor?
I am not there yet. I've tried. I've looked at some things. The thing is, I'm trying to scale this up to cover all the world,
Yeah.
and so I can't be too specific with any
Yeah.
one asset. But I will say, since I do most of my trading and work on Bitcoin and crypto, I did look at Bitcoin. And yeah, there are specific events that sometimes will trigger an inversion. For instance, Donald Trump's failed assassination attempt triggered an inversion on the model.
Yeah.
So that low, that caused a low. So when he was shot, that made Bitcoin bottom out and rally. And so that inverted the forecast for some time. Then they went
Yeah.
back in line. Now, what I can tell you is will sound obvious, but typically what happens, the reason they invert is the market turns and that turn is not shown in the model. And so for instance, if the market is falling, then you're looking at the next turning point and you're saying, okay, this is a low. We're assuming they're aligned. But then the market bottoms out and it begins to rally. And
Hmm.
then when you get to that date that was supposed to be a low, it tops out. So
Uh,
so that turn that did not show up in the model causes an inversion. But I haven't looked at specific events. I looked at 2024 specifically because it was very difficult to forecast that time period. And this new model that I showed you did an amazing job with it. So I was looking at that one specifically, and I did notice, oh look, it inverted exactly on this date when Donald Trump was shot. So that's an example. I found a couple others, but honestly, off of the top of my head, I don't remember. But there are specific events, but I would say that maybe not necessarily. I don't know if all inversions happen
well,
because something causes it.
I eclipse seasons are an incredibly reliable inversion point in my cycles. I'd be
Really?
curious if you plug that into your model at some point and just see what it spits out as far as probabilities, because I've found and this is my own personal just back testing my cycles, it's about a 70% probability on my cycles that I'm going to get an inversion during eclipse season. And then sometimes it inverts back at the end. But
Oh, really?
it's very
Interesting.
interesting if you look at the mechanics of eclipse season, and I'm not going to go into that right now, but I think that the mechanics of what's happening in the alignment between the sun, moon, and the earth causes a disruption in other planetary cycles as far as the energy that's emitted from them, because I think the eclipse season trumps that, energetically speaking. And I'm not saying like esoteric energy, I'm talking about like electromagnetic energy. Um,
Mhm.
and so that's one thing that I've found. And then I also observed the exact same thing you did, which is that um, it's like big unexpected events can shock the system and invert it for sure, like the election or Trump getting shot or any of those things, or a war, right?
Yeah, or a war. Yeah, that causes inversions. But it's funny how it's almost as if the universe always has to resonate. So even if you flip it, well, it's flipped. It's not gonna go, there is no correlation. It's gonna go,
Yeah.
it's gonna invert the
Yeah.
correlation, but it will still be there, which is why I see these as forecasts for turning points first and
Yeah.
a sense of direction second. With the new model, I will say that the inversion, once it happens, it tends to persist. So until
Mm.
the next one, which is kind of obvious. I'm predicting that the inversion will flip back to positive now. So the correlation will flip back to positive. The reason for that is I'm showing you here, macro.
Mm.
Now, these are macro models. I'll explain. I know they're just lines, so I'll explain what each line is. They're not just lines.
Mhm.
The thing about these macro tools is there's no inversions, none. Bitcoin either follows these models or it doesn't, but they will not flip. In other words,
Mm.
this blue line here is central bank liquidity. So this is the balance sheet of central banks in dollar terms. And I've come to realize, I don't know if I share this with anybody on my AMAs or anything, but I've come to realize that most of the blue line you see here is a value of the dollar. This is mostly how the dollar is valued against other currencies. Should be no surprise that when this line goes up, mostly that means the dollar is getting devalued. And when the dollar is devalued, 3 months later, Bitcoin follows. Actually, most financial assets follow. And so this is one of the main forecasting tools beyond astrology that I use specifically for Bitcoin. You can use these tools for other things like stocks, but I haven't done the work. I haven't done enough work. I don't really trade those. So this is basically it's a balance sheet of central banks, all of central banks, but it's valued in dollars, and so it's dominated by that dollar exchange rate. And then you move it forward by 3 months. So this is a completely different forecasting technique. We're not looking at planets, we're looking at macro indicators. And it's powerful when you combine the two. And the reason I like this one is, well, one, I can overlay it on my price charts. Orange is Bitcoin, by the way. The orange line is Bitcoin. And you can overlay them on the charts, and they're extremely reliable in and of themselves. You don't really need to look at anything else. You can just rely on these. Problem with these macro tools, of course, is that when we're at times like war, they're going to break down predictably. Because yes, you can see that the blue line has been going up. Sure, that's positive, but the war is a negative. And so this down week that we have now, we should not have seen that if Bitcoin had been following the macro. Of course, it doesn't follow it that closely. They can deviate. So that's one of the macro tools that I'm using, and it shows. I don't want to get too sidetracked. The reason I'm expecting this correlation on the declination model that I showed on Bitcoin to line up again is because the macro models, the black line and the blue line is central bank liquidity. The black line is just the price of the 10-year bond moved forward by 13 months. I'm not going to share the research on here, but basically the bond price predicts Bitcoin by 13 months. And notice, and this is not strange, they're lining up. They lined up here at the February lows. So you can see blue. I'll get to green in a minute. Blue, you can see that the blue line, this one, and the black line, both bottom out in February. Now, these can be up by weeks, up even months. Not months, like up to 4 weeks. Of these two, Bitcoin likes to track the blue line closest. So this is short-term indicator. It's only 3 months, but it's the most precise. But oftentimes they line up with the bond market, the black line, which is moved forward 13 months. And let me let me connect the dots for you guys. That means I can see what Bitcoin's going to do a year ahead of time. So I have a forecast, not perfect, but I have an idea of what Bitcoin should do over the next 12 months, 13 months to be precise. And so they lined up here on the February low. Not a coincidence. They also lined up here at the high. You can see Bitcoin, blue and black lines. So bonds in black, liquidity in blue, central bank liquidity in blue, lined up again here in October. Actually, it was late September. They lined up here again in February. Lo and behold. And at this point, I'm no longer surprised. I am a little bit when I see it play out. I'm like, well, it worked again. But I'm not that surprised anymore. And you can see them line up here in late. This is late April, early May.
Yep.
So they're both lining up again. So they're showing a high. And remember, the reason I like these macro tools, other than the fact that it's completely different angle, not looking at planets at all, and yet I get correlation, that's pretty powerful in and of itself. But another reason I like it is, like I said, there are no inversions here. This will be a high or the model will fail. They will not flip. You're never going to see a low in liquidity be a high in the price of Bitcoin. That makes no sense, and because it doesn't, and you're not going to see it. So these are already telling us that those highs that I showed you on the Astro models for Bitcoin those highs that show up in it. Listen, it is one of them says May 11, the other one says April 20. That's right in the ballpark of these two models. We're showing the same thing. I call it a late April top. It's a late April top, is what it's showing. And since Bitcoin likes to follow the macro, I will say, and it shows up in the astrology too, I would say, we're about to invert. I think we're about to invert back to positive on my models. And this is a low. We're near a low. Of course, maybe not. But this is where I'm leaning on right now. And part of the reason is it doesn't have anything to do with Bitcoin. Before I stop sharing, the
Yeah.
green line is pretty powerful because this is the T-bill supply. Now you're not gonna find this on TradingView. This is a custom indicator that I built. I've been meaning to put it online. The reason I don't put it online is because this chart would not update, and you would need to download a new version every month. Otherwise, it would be online already. So, but if I delete all that and I zoom out, I think you're gonna like this because this is pretty powerful. And this is macro. By the way, this indicator sits between liquidity and bonds. It forecasts Bitcoin by 8 months.
Okay.
It showed a low in February. But this is the only one of those three macro indicators, all three very powerful. This is the only one that Bitcoin likes to follow very closely. So you can see how these two lines look almost the same. Almost the same. They don't have to look at the same. Guys, one of them is T-bill supply, and we move it forward by 8 months. The fact alone that the lines are so closely correlated is remarkable. And so you can see here kind of an idea, a forecast of what Bitcoin should do over the next 7 months, because actually I ran this in February, so we can only see 7 months into the future with this one. What I don't like here is that it shows a high in July, June, which funny enough, it does show up on some of my of the Astro models.
Well,
June,
that's
July, it does
interesting
show
because
up.
that's one of the two cycle options that I have. One is a high in early May, and the other one is a high in the last week of June, first week of July.
There you go. Well, I have
So
the same thing. I have the same thing, and I'm wondering how it's going to play out because I don't know. I mean, before the war, I thought, okay, this April high is going to be an intermediate stop. The big one is in June. I'm not so sure anymore. I honestly don't know what to think. But this is the last one that I'm tracking. Of course, I like to see alignment between all three macro models. So, like you said, we don't have alignment for the top. They don't agree. Two
yeah,
of them are saying May, early May, late April. One of them is saying July. I tend to rely on the other two um, because there's not a lot of resolution to the T-bill supply data. This comes directly from like some treasury website. They have an API and you can download this data, but you cannot plug it in directly into a TradingView indicator. TradingView it doesn't work that way. So some of this stuff, I'm still figuring it out. But yeah, so beyond Bitcoin and beyond macro, and we were discussing this offline, I have a lot of turning points for late March, early April, a lot, including on oil. And so
hmm
I'm like, another thing is like, I keep thinking this disruption in the supply of oil is extremely bad.
yeah,
Um, if it were to last into June, the damage is incalculable. So I just
yeah,
don't think it's gonna happen. Now, call it
yeah.
normalcy. Call it normalcy. I don't think it's going to happen. I just don't think we're going to have a shutdown Strait of Hormuz forever. I think there's going to get reopened in some capacity by next week. Not open necessarily because markets don't need it to be open. Markets need to know that a solution is coming, and they'll start to price that in today. So let's say Donald Trump says we're opening the Strait of Hormuz on March 20th, oil will come down.
Yeah, I agree with that. I mean, I'm tracking. Well, I mean, you just get back to like one of the basic Gann techniques is using the equinoxes and the solstices, right? The quarterly turns in the
Yeah,
market. And it works to varying different degrees on different assets. And if you just look at the last 10 years on the S&P 500, it's got about a 70% hit rate of being a
very
major
good.
weekly pivot, plus or minus 2 weeks, but actually it usually comes in plus or minus 1 week. So the fact that we're firmly moving down into the seasonal pivot point, and from a Hearst cycle perspective, we're also in orb for the 20-week cycle low on the US equity indexes.
Yep,
So
yep, yep, yep.
yeah, and then you add into it that everybody's getting a little uncomfortable with how close to the lows we are.
I'm very uncomfortable.
Too. I think my base case has been and continues to be that we were going to hold the low of the current weekly range on the NASDAQ. And the reason that has to, because if we break that range, just from a technical analysis standpoint, right? Like if you look at a squeeze is, just a compression range, right? It's defined technically by when the Bollinger Bands set to 2 standard deviations come inside the Keltner channel set to 2 ATR, then you're getting a compression squeeze. And when it breaks, the standard rule is that it's going to see 6 to 8 directional bars on whatever time it's squeezing. And I've been using this indicator. It's John Carter created it. I took a few of his classes and was in his room like years ago when I first learned how to trade, read his book, highly recommended, Mastering the Trade, for anybody who's newer to trading. But it's a very reliable signal. So this, with the NASDAQ squeezing since, November of last year, if that breaks down, then that to me, that doesn't say 20-week cycle low, because we can't break that range down. I mean, anything can happen, right? The markets are completely uncertain. I can't say what can't happen. I can only say what is a matter of probabilities, right? But the most likely probability is that if that range breaks down, that's a serious and dramatic flush down, and that it's going to be the beginning of probably a weekly and maybe monthly downtrend if that happens, So
agreed.
Yeah. So my base case is that range holds and that we at least get a rally back up to test the all-time highs, at least, and then we have to see what happens there. So
me too. I'm expecting the same thing. Not just because it shows up on Bitcoin. I just showed you how it shows up on Bitcoin. It shows up on the S&P a little later, but it's fine. These are all within the margin of error. This is for the S&P. I have the low pinned at what am I looking at? May. Oh man, I lost track of this. Okay, April 3rd. That's a Friday, couple of weeks from now. It can easily be next week. I mean, I've seen it be off by that amount. I haven't tracked exactly how off it can be, but let me just show you one of these highs is on February 20th, and the actual high, sorry, the forecast high was of March 4th. So you can see it's 14 days. So 10 days. So we're there. Next week, we're there. We're in that range for the low. I would look at more at technicals and to see if we're testing support, because we should. I think I haven't looked at it today, but maybe we're testing support. I would expect another flush. I've been expecting another flush. In fact, I wrote a report last week saying we're going down into the last week of March. And then we rallied this week. I was like, was I wrong? That was a monthly report for my subscribers. I'm like, do I have to rewrite this? But no, then we came back down. I was like, I knew it. We're heading back down into this key turning point. Last week of March, first week of April. Shows up in oil, March 26th. Shows up in the stock market, April 3rd. Shows up in Bitcoin, March 21 through March 24. So it's like, okay, it looks like we're about to pivot here. Now, longer term, I got a little concerned with the stock market because, and I have not done a lot of work on this. Okay, so take this with a pinch of salt, but not looking great. The long-term models, the long-term cycles on stocks, they're not looking good at all, to be honest. It looks like we're heading for another 4.5-year cycle correction at some point this year. I don't know. I don't think it's now. I think it's after June. In fact, my read is I think something bad happens around that time, and then the markets sell off proper. I'm looking for a relief rally, couple months. That's all.
We share the same overall outlook. I love it when that happens. Yeah, the eclipse season that's in August of this year is really rather unfavorable looking to me. And then that leads us right into Venus retrograde, which, as far as market cycles in the US equity markets, is a very reliable cycle to be correlated to periods of weakness in the US equity markets.
There you go.
And then we get both because you were talking, I think earlier when we were offline, you were talking about the Sun, Mercury, Earth alignment cycle, right?
Yeah.
Mercury inferior and superior conjunctions. We're going to have a Mercury inferior conjunction in Scorpio at the same time as a Venus inferior conjunction in Scorpio in the fall. Yeah.
That sounds bad.
Both are periods that are correlated to weakness and actually Mercury retrograde in Scorpio. I went back and looked at all of those cycles since 1980. and they're really not favorable. So, yeah, I agree
Yeah.
with you.
So
We're I feel like we're kind of like standing on the edge of a very long-term cycle, you know?
yeah, me too. We're standing on the edge. Now, same thing is true of gold. I was asked about gold last time I did an AMA, and I just said, listen, I'm just gonna say what the model says. It's pretty bearish. It's pretty bearish. It suggests that the high is in, basically. And in fact, we're overdue because
Yeah.
there's a long 7-year cycle on gold, and the model put the ideal time, and that one can be off by a year. It put the ideal time for a high sometime in late 24, early 25. It's been a year. So it's been a year since the ideal time for the peak. And it's acting ugly right now, very ugly. It makes no sense to me because if you say look at what's happening in the world, I would say, yeah, sure. I mean, gold should be rallying here, but explain to me why it crashed over the past couple of days. Makes no sense. If you looked
Well,
at it, why is it
yeah,
crashing?
I mean, it's after a historic run like we've seen
Of
on
course, of
silver. I
course,
mean,
of course.
technically speaking, we could see that thing range for a while, but you know what's interesting?
Oh
I
yeah, they should do. Typically, the 7-year cycle high is a long process. It
copy. Yeah.
ranges for a while.
Let me show you something because this is actually something that is very interesting. I have oops, this is, I'm not even going to go into that. My paid subscription to TradingView is now giving me these like crazy alerts. So this
Oh yeah, I was doing the same
is
thing
that,
for
yeah,
me.
I was like, you're trying to now upsell me again?
Yeah, 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 yeah.
Um, okay, so this is a gold chart on the weekly, and this is my cycle projection. And check out, that is purely directional. Once we hit, you know, late April, early May, right? This
Hmm.
is like probably we're ranging through April to May. And then that thing is purely directional through the rest of the period. Um,
Interesting.
and so that's interesting to me, right?
Yeah, it
Um,
is interesting.
and I had two different cycle measurements for the 20-week cycle on gold. One I did not think that this was the 20-week cycle low, the one back here in February when we had that quick sell off. But
Uh-huh.
I,
You think it might be now?
yeah, I think it's now. Yeah. So I
Let me
think
see.
it's like due this week or next. And I have a weekly pivot measurement. Both this week, this is a Gann square of 9 measurement using Saturn cycle.
Uh-huh.
And then next week we have another Jupiter Saturn cycle measurement that I have. And so I think this is going to be our cycle low. So could gold make one more epic rally into the summer? I mean, it
It
could. Do
could.
your models negate that as a
Not at all.
possibility?
No, not at all. I'm trying
Yeah.
to look at my 20-week cycle forecast, and I think I need to rerun these models. It's showing a high in January, which we got, but then it shows a low in October. So it's like, yeah, that's not useful. That's also
Oh,
not a 20-week cycle.
no, that is
That's
going
too
to
long. That's like a year.
that
Uh,
is a longer term cycle.
yeah, I need to rerun this thing. Let me see if I have anything. Man, I've been doing so much work on these. Oh, look, here's one. Is this good? It's iffy. It's
You want to
showing a
share your
low in
screen?
September. Sure, sure. Take it with a giant brain. No, this is not useful. This is not
Not
useful.
useful. Okay.
No, it's not useful. I haven't done a lot of work on gold. The only one that I have, let me show you. So the only one I have is this. I'll share this with you. Because this is already pretty proven. The thing about it is I run different combinations of these models. Not from an astrological point of view. What I do is I isolate the cycle using different techniques, and
Mhm.
then I find the best match. You can see this and say this is not a good match. Actually, the numbers would disagree. It's actually pretty good. 80% correlation in testing. That means all you're seeing here is forecasts. So from 2016 on, it is forecasting. And this is actually one of the most reliable models on gold. I don't remember if this is the best one or not, but this is a pretty good one. And it's already showing this entire 23. Where is the peak? The peak is November 2025.
Mhm.
But it starts in October 2024. So it's this time period here. And this is actually quite reliable. it's using so it's using orbits of planets, and it's showing it's this big
Mm.
correction as far as I can see, which does make sense when this cycle tops out. Now, from a cycle point of view, there is a 7 and a 14-year cycle on gold. The last 14-year cycle low was in 2015, December. Uh, just add 14 days. By the way, the corrected period is about 3 years. This
Mm.
is what this model is showing. So no, it's not contradicting that because, like I said, this is the only useful model I have on gold. I have this one too. Let me look at this one. Now this is horrible. See, I need to do more work on these.
Mhm.
Um, that's
Well,
why it's not online, guys. It's still a work in progress. But this is actually quite reliable. This is not the best version of this. I think I ran so many that I lost a good version of this.
mm.
Um, but it is showing this time to be a peak, which it tracks. What I'm trying to say is it tracks perfectly with the 14-year cycle in gold. You should expect it sometime around now. Now, before I had these models, I kept saying, no, it's going to be 2028. It's going to be in 2029, and it might correct into 2032. But then when I ran the astrology of the cycle, it showed something different. It showed no, peak is it's kind of right around now, like in 2026, sometime in 2026.
Well,
Um,
do you know that what fits the one of the biggest cycles that I've found that correlates with gold is the sunspot cycle. There was an
I don't
astrologer,
have that one. I
Lieutenant
don't
David
have.
Williams, and he wrote a book called Financial Astrology. And if anybody hasn't read it, it's highly recommended. He was a brilliant market analyst and financial astrologer long ago. And he tracked the sunspot cycle like from the 1700s. And so I took his data set and then I just put it on my chart from where he left off, which I believe was like in the 60s or the 50s. And basically the sunspot cycle runs roughly 11.86 years. But there's a longer cycle that's about 22, it's two sunspot cycles, right? On gold.
Uh-huh.
And the sunspot's like, well, here, I have the research. Let me see on my chart. Let me see if I didn't prep it. So
Yeah, I'd like to see it
yeah,
because I
let's see if
actually
I
could
can.
use something like that.
Oh goodness, there we go. All
If
right,
I
let's
if I can borrow somebody's research, I mean that's always good.
sunspot. Let's see if I can find it because it's in here. But I have so many studies that I've run on here
It says
that
sunspots, the solar cycle research sunspots. Is that it?
there it is. Where'd you see it?
Just move your cursor up about 10,
No.
a little bit more. Solar cycle research sunspots.
Oh yeah, it's even on.
There you
Okay,
go.
it's
Yeah,
on.
it's on.
Okay, then that means I need to just turn all this other stuff off. Okay, hold on. And then we're going to zoom out to the monthly chart because that's going to be the best place to see it. Okay. And let's just
I need the data for that. Then I can plug it into my
I
model.
have I can share what I have and I can also share let's see, why is this hold on, sorry, I'm having speaking of if we want to talk about Mercury retrograde for
Let's see.
this has been one of the hardest Mercury retrogrades in my life personally.
Oh,
um,
for me, I wouldn't say personally, but it was tough. It was a bad one.
well, by personally, I don't mean in my personal life necessarily. I just mean like in my day-to-day experience. It's been very hard, you know?
Yeah, for me
Like
too.
my
It's been
tech
tough.
has been giving me grief. Okay, here we go. All right. So here is this is the beginning of the solar cycle 21. So basically what the statistics find is that usually, barring an inversion, the solar cycle minimum correlates to a low in price, and the solar cycle maximum correlates to a high in price.
Okay.
Um, of course, there are some differences between the major downtrend and then the uptrend.
Uh-huh.
But you know, if we and then I've measured these high to high, which is interesting, right? Because most like Hearst measures cycles low to low.
Uh-huh.
But Dr. Or Lieutenant, he's a lieutenant, David Williams, he was measuring high to high as well. So he
You can
measures
do
a
that too. You
yeah,
can do that
yeah.
too.
Yeah, I've done it on Bitcoin too. So he measures a 22-year sunspot cycle that goes high to high. And so if we run from the high in 79 to the high in 2012, and then we run from the high in 2012 forward, that gives us a high in July of 2035. And so we're actually in a uptrending high to high cycle right now. That doesn't mean we're going to go
Oh,
straight up, right? But with a low due around 2029, 2030, because
mhm.
that's the projected low of the next solar cycle, right?
There you go.
So, and
Okay.
because we just reached the peak in the current solar cycle, we're in solar cycle 25 and the technical peak for it right now is October of 24. So I was actually anticipating gold to top out last year, and it kept going. But some
Yeah.
solar cycles have a double top even. And I don't know that that's necessarily happening, but we did see during this epic run up here, we saw a massive surge in solar flares. And so, it's again, like you said, like these long-term cycles can have a running orb of 1 to 2 or even 3 years sometimes, right?
Yeah.
This is more like 18 months, like 12 to 18 months, So I
Mhm.
have us in orb for a high right now in gold
Yeah.
for sure, with a low due in 2029. But that doesn't, I mean, it could certainly make one more leg up. But again, here we are back to the I feel like we're teetering on the precipice of something in a higher time frame cycle. But I think that low in 2029, 2030 is another buying opportunity for an ultimate high that we're due for in 2035.
Oh, I would agree 100%. In fact, I would probably buy, not even wait. Like if I see 3,000 gold, I'm gonna start buying again.
Yeah, absolutely. I totally agree.
Um, Now it really depends on how it behaves. It might be a trade, it might be me starting to accumulate. I don't know because I did notice that the Astro model that I showed you, which runs on declinations, also has a peak around the same time as the solar peak. So it's like we're late, but
Mm-hmm.
these can be off by a couple of years.
Yeah.
So we're still there. And I said this on an AMA, I think it was in February or in January. I don't remember. I said it recently. I said the thing that worries, and this is before I had the astrology showing me this long-term cycle, this 14-year cycle on gold. So before I had that, I was saying the highs in 29, 28. But the thing that gives me pause, it's very toppy. It's
Yeah.
trading like it does when it's going to have a massive high. And that is always the thing that gave me pause. It's like, well, I mean, if I look at the world, I don't see it topping out. But if I look at the cycles, I do see a high in gold and an important one. But I didn't have any model that show that. But
Mhm.
then when I ran this thing and it turns out on gold, like I said, I need to do more work on gold because that's an old version. Like that's 2 weeks ago, and that's like forever ago when you're using AI and whatever. It's like that was ancient history 2 weeks ago. I need to rerun it.
So
I
Uranus
don't
and
have
Gemini.
I don't
Everything
have
comes so fast.
Yeah, it's fast. It is fast now. Now, one thing I would need from you maybe is I would need some type of birth date for gold. Here's what I was thinking of using,
Oh, I have.
which is, oh, here's what I was going to use. You tell me if this makes sense or not. When Nixon closed the gold window temporarily, that's what I was going to use because that's when gold became detached from the monetary system and became a freely traded asset. I was going to use that.
That's a great idea. I have not experimented with that chart much, but I actually will now that you see. I have that chart, I believe, but I haven't used it as much. The chart that I use, before we were on, I was mentioning I use what I call mother charts for assets. So I try
Mhm.
to go back to like the origin point. And of course, it's not the origin point of gold because, that would be like right along with the origin point of the earth, right?
Right.
But
Yeah.
I use the gold fix chart. So the date and the time and the location where all of the bankers got together and fixed the price of gold for the very first time it's well documented. If you go to the Rothschild website, there's a whole page on the first fixing of gold. And it's September. Hold on, I'll have to verify, but it's in September of 1919. And it's at
Uh-huh.
11 a.m. So not, and it's so the location is correct. The time is correct and the date is exact. So it's September 12th, 1919 at 11 a.m. in London. So I'd be curious to see how that works for you. And
I'll
then I
try that.
use too. So
I'll try that. I was thinking of using that Nixon speech because I feel like the monetary system changed at that time. So I'll try both. For bonds, I don't have anything, and I could sure use that because I was telling you offline I used to have, again, ancient history 3 weeks ago. I had a declination model, which is sometimes very useful. But typically, there is something called a zodiacal model. So what I do is I turn the movement of the planet into a sine wave, just
mm-hmm.
using trigonometry. Now, why is that? Well, for obvious reasons. I can compare it and correlate it to a cycle chart.
Mm-hmm.
I can't use a circle. That's
Yeah.
not, that doesn't correlate. But if I turn it into a sine wave, now I can correlate. That was an
Yeah.
idea I had. I tried it out. It works. I tried
Yeah.
it out with declinations first, which already show this sine movement. But then I said, hey, how can I do that with the orbit? Well, it turns out you just apply sine. Just sine, literally trigonometry, like literally. And that was my first attempt at solving the puzzle. It worked. It worked remarkably well. Um, but then yesterday, yeah, yesterday, actually last night, no, so it's just 2 nights ago, I thought, hmm, the problem with using the zodiacal model, turning a planetary movement or planetary movement into a sine wave is you always start in 0 degree Aries. That's 0.
Mhm.
Then 90 degrees, so Cancer, 1, 90 degrees. Then the opposition, 180 degrees, is 0 again. You're going back down. That's the descendant. And
Mhm.
then 270 degrees, the waning square,
Mhm.
270 degrees, the waning square, that is -1. Then you go back to 0 degrees Aries. Um, that is an absolute reference, right? You can use this absolute reference with everything. But then I thought, well, from Hearst, we know that when you see a big bottom, all
Mhm.
cycles restart then.
Yeah.
And I thought, what if I just I slightly change the zodiacal model so that all the cycles, I force them to start on a certain date. And then, so I thought, I was in the shower thinking, well, what am I tracking here? Well, I'm tracking the cycle of each specific planet since that date. And I was like, wait a minute, that's an astro chart. That isn't literally what we do with astro charts,
I
a
love that.
natal chart.
Yeah, you're doing with your model with the sine wave exactly one of the primary techniques that I'm using in my ruler measurements when I showed you those degrees of measurements, right? On
Yeah,
the
it's
Bitcoin
how
chart.
long since.
I'm one of the primary things that I'm doing is taking major highs and major lows, and I'm going to the planetary positions and the price at that major high and major low, and then I'm running calculations straight off of that, right?
Yeah, yeah,
And
yeah,
because it's almost like a reset, if you will, or like a
yeah. You
it's like
know
it's a birth
from
of a cycle. You could look at like as a natal chart is like a birth chart, right? It's the birth of the next cycle. So
exactly what it is. So I thought, oh, okay, that's gonna be interesting. So then I took it a step further and I said, okay, I'm gonna have three possibilities. Either this is a high, the date that I'm giving you is gonna be a high, at which point I would like the sine waves to start at 1, not 0. This is not the start of a cycle, it's a culmination of something. That's Cancer.
yeah,
That's not Aries.
yeah,
Aries is natal. It's like an event, a start of something. And then we had lows. So this is right before the end, or right before the restart, we have the waning square. That's -1. So I have these three possibilities. And then I thought, okay, so basically, programmatically speaking, uh, it's just you're just it's the same zodiacal model, only you're resetting positions at certain specific points. And this is what I want to do with I want to do this with all the assets. I tried oil. I tried a couple with oil. I found one that worked pretty well, which is the top in 2012. But again, not a lot of opinion there. I would love to have a natal chart because I tried highs, I tried lows, I tried natal charts, like the inception point of something. But that works best. I tried it with Bitcoin, the date of the first block, and my
yeah.
goodness, it blew me away. I was like, whoa, this is very good.
Well, it's undebatable, right? I mean, I know people who use other charts, and I'm not going to tell anybody what they should and shouldn't use because you use whatever you want,
Yeah, yeah, of course.
but it's undebatable. That is the exact date and time when the first block was mined. The only thing that's arguable about it is what is where, right? Because you don't
Which
have
I don't,
a location. But if you're not using it for intraday, it's not as important, right?
not important for me. Yeah,
Yeah.
yeah. I use like the shortest cycle I trade is 80 days, so it's a
Yeah.
quarterly cycle. The 20-day I use for color. Part of the reason I said I think we align again with on March 21, 24 on Bitcoin is I have a 20-day cycle low
Yeah.
on the 21st. So
Yes. Yes. I'm pretty sure that's what I've got the tallied there too.
so I may be wrong there, by the way. I'm prepared to be completely wrong and have the market crash into April. There was an alternative astro forecast that showed exactly what you showed, a retest on April 4.
Yeah.
I have that too, but that's an off forecast because macro doesn't show it and the main astro models don't show it. Only a couple of them do. So it's like, okay, I'll watch for this, but not my base case.
The only thing that, because I've been really, I mean, I still am. My base case is that we're forming this 20-week cycle low right now, and 40-week actually in a lot of the US equity markets, right?
Yeah.
Then, there's a cycle that I went back and I looked at all of the Mercury retrogrades through water signs. And that was actually quite telling, because that is not favorable in the US equity markets, like generally speaking. But Mercury has a very eccentric orbit. So it's kind of, like Venus will appear in the sky on roughly the same day 8 years later because its orbit is circular, right? So you get a very precise, like Venus is, say, at 12 degrees on August 8th, I'm just pulling numbers, at 2026. And if you go 8 years prior, it's going to have been at like maybe 15, or I mean, like 9 degrees or something. It's just a few degrees of difference on the exact same calendar day. But you don't get that with all the planets, right? So
Mhm.
you get Mercury is like, even though it's the shortest planet and moves the quickest, it's got a 47 or 46 year cycle where it's going to line up with the calendar day. And that throws us back to
Oh.
1980. And so and it's actually not even every 46 years. The orbit's so eccentric and unreliable that it's actually, you can't just go back 46 years every time and find it. You have to like really go through your ephemeris, and it's kind of a pain. So when I stumbled onto the fact that we are in this cycle from Mercury retrograde in the same series, and it just so happens also that Mercury will station retrograde, you probably know this, in different elemental signs, right? So we're in a series of water signs, but sometimes it only goes through those signs 4 times, and sometimes it goes through them 6 times. And we're in a set that's going to go through them 6 times.
And they're
And
not favorable.
they're not favorable, as it was in 1980. And what was interesting, though, was that the low in the US equity markets came in, I believe, oh, you know what? I don't want to say the wrong day for our viewers. Let me go back. But it was
I,
pretty much the equivalent to next week, in the Mercury cycle, right? Because
right.
I'm calculating Mercury cycles basically. Here, let me see if I can just pull that 1980 cycle up real quick for everybody. Dun, 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 dun. I'm going on the daily so that we can get the exact date. But also that 1980 cycle forecasted, because I forecasted the high in silver. I was long silver for a long time, and then I told everybody, like, this is the high, it's incoming. And I got out, and everybody was like, you said it was the high. 3 days later, 4 days later, crash.
Right. Yeah, of course. I mean, that you nailed that.
That's
Just
close enough, right?
that's
Like,
close enough.
I
Yeah.
okay, so let's see. Here's 1980. Actually, I pulled it up. These are not I have the lines on here, but these are not the ones. So anyway, but it's okay because we can just look. Here's the low. The low
Oh,
in 1980 was Thursday,
interesting.
March 27th. And honestly, if you take a look at where the peak was, so the peak was February 12th. And then if we go forward here on the Dow Jones and take a look at where we're at, it's not a perfect lineup. Let's see if I can get this to cooperate with me. Here we are. So not a perfect lineup, but
Oh,
peak February 10th.
that's closer than I thought, to be
Peak
honest.
February 10th. That
That's
means
pretty close.
due for a low next week. And so, that's what I'm looking at. And look at this. This is almost a perfect 382 retracement right now. And so kind of like, then when I get back to like all the extreme bearish sentiment in the market, I mean, yes, we've got a war. Yes, it's like really complex situation in the world, with to say the least. Look at
Mhm.
that. That's almost a perfect 382 retracement. And we're daily oversold on the Dow. I don't know. I like that
I
stuff.
I hadn't even looked at the Dow. I didn't realize how oversold it was. I looked at the
Yeah,
S&P, which is still holding the range.
the
At least
S&P
last I
is,
looked.
yep. They diverged for sure, and the Dow is making a nice clean 382 retracement for its 40-week cycle low. And so is IWM, but Nasdaq and S&P are holding their range. So yeah,
Hmm.
that's what I'm keeping an eye on. when everybody else is not everybody, a lot of people. I feel like there's a meme. I actually just posted it on Twitter today. It's like Bugs Bunny and Elmer Fudd, and they're like bull market, bear market, bull my Twitter feed looks like right now.
Yeah, yeah, that's what it feels like. I mean, I think there's two camps. There's some people saying it's the end of the world, World War III, and stock up on oil. And I'm like, you know what? I think those oil people who are buying oil now, they're gonna get killed.
Yeah. Oh,
Here's
yeah.
why they're gonna get killed, because the people who control the market don't want it to surge.
Yeah.
And they have already proven time and time again, they'll manipulate it lower. Now I think where I land is I don't think we're in a bull market, not on any of the assets we looked at today.
Yeah.
Um, but I do think we're due for some reprieve, like a relief, like I need this relief. And I'm gonna
Yeah.
dump some positions
Yeah.
when that happens. I'm just gonna lighten up on risk. I'll continue to trade, but not nearly as big as I've been trading. Um,
Absolutely. And I think this
but
year is really more of a trader's year. This is not a
it Yeah, it is. It is. I went in. My biggest trade right now is on Bitcoin, and I went in knowing full well. All right, because liquidity was showing this big collapse. I was like, okay, this is gonna be a tough one, but I bet I can catch the way higher, and probably 85. 85 is good for me. I don't know if we go there, but it would be very good. 80 is good. 85 would be very good.
yeah.
But the thing is, and I'm trying to build this. I want to build this into the tool. When I see alignment between different asset classes, that's, I think, quite valuable. So this last week of March, this first week of April, it keeps showing up on many of the assets that I know happen to be correlated right now. Normally they're not. Bitcoin's not correlated to the stock market, not correlated to oil. But right now, one of my tabs on TradingView is exactly that. It's oil inverted, so it's
Hmm.
-1 times oil, then the S&P, then Bitcoin. Perfect correlation.
Hmm.
And I
Yeah.
hate it. It's like, God, no, I don't like these moments. But then I thought, all right, well, I'm gonna try and forecast those three, see when they turn. Then I have different scenarios for when we might see a turn. So let me see oil first. But it turns out oil shows up on March 26th. Then we have the 3rd of April for the S&P. Then what you just shared, that's pretty impressive. I don't have that 46-year Mercury cycle, but I mean, to your point, it looks exactly the same.
Yeah.
So, and so I'm like, okay, so what would it take in the world? And the thing I love about Astro is it contains geopolitics. It is in it. We
Yeah.
go to war when it's time to go to war. It shows up in the planets. It's no coincidence that we're redrawing maritime lines and who controls naval. Like, uh, I mean, isn't that a perfect expression of Neptune Saturn conjunct in Aries? It's like we're fighting over who controls the shipping lanes. So
Yeah.
we're redrawing the borders, who controls what. I've seen a lot of people say when these two come together, what happens is the limits are destroyed and they're redrawn. So the new lines are redrawn when this happens. The last time was the fall of the Soviet Union. We redrew the lines, but it's almost perfect now because we're fighting over the oceans. Trump went to Panama. Then he demanded something out of Greenland. Now he's going for the Strait of Hormuz. And I'm like, well, he seems to be trying to reassert US dominance over the seas. That seems to be one of the many ways that this conjunction expresses itself. So I believe we can use astrology to forecast markets even now because
Yeah.
this stuff is there. It shows up there. So, and I think it's just we're an announcement. I keep saying we're just, and the markets are kind of pricing this into. They're pricing a short-term shock to the oil market. If you look at the futures curve, it's in backwardation, meaning front month contract is very high, but if you go to December, I think they're starting to go up now, but much lower. I think we're still trading with a 70 handle in December 26. So the market is saying short-term shock. It's not
Yeah.
saying, it's never said this is an ongoing disruption. Now, markets suffer from normalcy bias. They'll never price in world war. And
Yeah.
I think that's correct because normally you don't get that. So the markets are right to do that. But where was I going with this? Oh, I think yes, this could change quickly. I think that next week you could see something. It could be that Trump wants to invade the Strait of Hormuz with the troops on the ground, boots on the
Yeah.
ground. Sorry, that's the expression, and just take it over, take over the control the
Oh,
flow of
yeah.
goods.
Yeah.
It seems to, he seems to, I don't know. I mean, that seems like his only choice. at this point.
Yeah,
I'm not cheering for this, by the way. I'm just
no,
saying,
no, yeah.
looks like I'm saying that would make oil tank. It would make it just
Well, yeah.
crash.
So I'll definitely say, I wrote a 2026 forecast, which if anybody hasn't checked it out, it's available on my Patreon, and still totally valid because it's only March.
Hmm.
But one of the things that I tracked in there was Jupiter, geocentric Jupiter transiting the sign of Leo. And what I consistently was seeing was it, and I go through each of the events in 1900, and there's always oil supply shock, um, and or surge, as well as conflict that causes price shock. And typically what I was seeing was that it was going supply surge, so drop in oil price first and then conflict. But what we seem to have gotten this time was it came a little early with Jupiter in Cancer, right? And we got the
Hmm.
surge. So I expect we're still going to see a supply surge, which would drop prices, right? Because both things tend to happen during that period of time. So that just fits with what you're saying, is that
Interesting.
I think in the next, year to 18 months, we're going to see some pretty extreme volatility in oil.
Yeah, yeah. And I don't trade oil, but right now, I know I hate to even look at it, but right now it seems to be that since it is moving to the tune of that market, I found one interesting cycle, and I was showing you offline. Just the Venus declination, plus its rate of change. So it's a combination of the two. And it's the last turning point, the last three turning points I had for that. It's for oils, it's for a 40-week cycle. I think it's 40 weeks. Let me check. Actually, I think this is for a 40-week cycle in oil. Yeah, 240 days. Is that 40 weeks? That's not 40 weeks. I don't know how long that is, but it's a 240-day cycle.
You know what I have
Um,
handy is I have your spreadsheet that you made for the Hearst cycles. Well, 200 days is 40 weeks. So yeah, 240 is probably like a 50 or 60 week cycle.
yeah, it's like 34-week cycle.
Yeah.
The way I'm doing cycles now, the way I'm finding cycles now is I use something called this spectral analysis. So you basically take the price chart and you just isolate the frequencies and you see where they are. For instance, Hearst doesn't have a 480-day cycle. It keeps showing up though. I keep finding it. I taught it on my course. I taught about an 18-month cycle. It turns out it's not 18 months. It's more like 16, but it is there. And I keep finding it. I found it on the Hang Seng Index. I find it in oil. I found it on the stock market. And I found it's like almost exactly there, always 480 days, which is about 15, 16 months. Um, but that's not the most prominent cycle that I could forecast reliably on oil. The one that I forecast reliably is this 240 weeks, 35 weeks, 240 days. And
40
the reason I like it is I like simplicity, and this thing is just the declination of Venus. Literally, that's it. And so when I find something like Mercury Sun predicts the 20-week cycle in the stock market, I'm like, oh, that's gold because that's a single thing. That's a
Yeah.
single thing that's causing it. Normally, you're looking at 15 things that explain a cycle.
Yeah.
Most of them are not that relevant. Usually it's five or six, but yeah, 15, 20, that's the norm. When you get one, it's pretty good. And look at this. This is quite interesting. Let me share my screen because and I do have to do a bit more work with oil. Some birth date would be nice. If you
Well,
have that.
I have the first ever oil well drilled. Um,
Oh, well, it's
that's useful. And then I have I have a handful of different natal dates I'm happy to share with you.
absolutely because I think for oil, I think a way to improve these bottles would be okay. Let me give me a birth date, because not even high or low, because I tried it with that. It
Yeah.
sort of works. It does improve certain things. Like for the stock market, I found a very reliable way using the March 2009 low, the March 2009 low, post the 2008 crisis low. That point works very well for predicting the 4.5 year cycle. Very good correlation. It actually beat it beat the model that I was using. But this is what you're looking at here is I love this. This is you're looking at the declination of Venus in orange, and then of course for in blue we have the price of oil. It's not perfect, but I did go back a few years on training data, sorry, on testing data, which is it starts here in 2017. So these are all forecasts. You're seeing forecasts. This is very reliable. And what I notice is that it's more reliable than it meets the eye. So you look at it and you go, yeah, I'm not sure. You actually look at the price chart and what happens and what happened at these dates, and it is very reliable. And just check this out. I mean, we have a low on January 7th. If you pull up a chart of oil, you're going to notice that it's not quite when the rally started. It's when this current leg up started. So there's kind of a double bottom in oil. Let me pull it up the chart. Where is it? I know you can't see my screen. I'm just looking
You
at
know,
it
I
because I
just pulled
want
up the first oil strike for crude oil, and lo and behold, it's a Mercury inferior conjunction within 1 degree.
Oh, that's interesting.
That is interesting, isn't it?
Yeah. Yeah, we have to be bullish. So January 7 is when this so there's a double bottom between the 16th of December and January 7. January 7 is when I think the market, because those are the Iranian protests. The oil market began to rally exactly on January 7th, actually, if you look at the chart. So it's like almost as if somebody
Mhm.
suspected something. This is this date. But then this is quite interesting here. Look at this date when,
That's
because I
our,
noticed you see
yeah,
these intermediate stops that don't look very important. It turns out those dates are very important too. And this one is February 28. I'm not making this up. You can see it right here.
I know,
February
I
28
see
is when the
that.
war broke out. That's when the war broke out. And now the next one is March 27 or 26. Not making this up. You can see it right here. And this is just Venus declination, which oil loves to follow. It follows it to within a few days. But the next big turning point I'm looking at is May 30th, June 2nd. By the way, that may not be the high. It could be one of these secondary turning
Yeah.
points too. So it could be July, it could be August. It's this period I'll be watching
You
because
know,
I can show you there's a few of these highs. You see how sometimes the high is on this minor point,
yep,
and
I do
this
see
one
that.
is like this one didn't matter or it inverted, whatever you want to call it. So, but this is a single factor. I'm just looking at the declination of Venus, and like I said, when you look at the price chart, not this blue line, which is a proxy for the cycle, not the actual cycle, the alignment is actually very good, very strong. So, so
Yeah,
yeah.
that's really brilliant. And you know, we're also due for here, I'll share I track the Neptune declination cycle and have found that to be incredibly accurate. And I actually so I have an indicator from my time trades tools. This is the Venus declination cycle. I just threw it on here
Oh, nice.
because I wanted to see your cycles that you were sharing. So we have exactly lining up with there it is July 6th. So we have two Neptune declination events, lo and behold, one the week of May 18th and one July 6th.
Ah, well, there you
So
go.
that means Venus declination and Neptune declination are going to align during that time.
Oh, wow.
That's very interesting. And I mean, I don't know if you can generate computer models to, I wonder what happens when those things align, you know?
I don't know. I would need to look. The Neptune declination is so long. It would probably show up for me on a longer cycle.
Well, hold
It would
on. You know,
not.
I have all the Neptune. Let's just look real quick. I have now that we have Venus on here, I have the Neptune declination cycles. So here's one. So this, okay. So they actually seems like they line up. They lined up. Here's the minimum declination lined up. And this is a
Uh,
weekly chart, mind you, on crude oil here. So let me,
yeah.
right.
Yeah.
So there was a minimum declination there, which marked a weekly pivot low before a multi move up. And it was just looks like a couple weeks after peak Venus declination low. Look,
Yeah.
they line up a lot.
Yeah, they line
There's
up a lot.
the
That's interesting.
maximum. Now here they get off. So maybe there's got to be a cycle that we would have to look at probably over a period of like 50 or 100 years to maybe actually really
Yeah.
good.
Oh, you see that's the high I was talking about. September 2023. You see how it tops out exactly? That's May.
May, September here.
May
Oh yeah.
produced the low, so it
Yep.
inverted there. So it showed a high,
Yep.
it produced the low. But then in September you have the second, I call it a secondary high because that's what it looks like. It looks like
Yep.
a like you see it's like a lower high on the declination, but that's the actual top. I've seen that a lot. So I learned not to ignore those. I learned not to ignore those dates. It's like,
Yep.
okay, so it's not just peak declination, bottom declination, it's these intermediate stops. Those matter too. Which I just thought was interesting because visually I would ignore them. I was like, this is just noise. It's
Yeah,
not. And
that's very interesting. That's I mean, look at how powerful that is when they align. That's pretty cool.
yeah, that's pretty cool. That's pretty
That's
cool.
that's very so um so then the May event is a zero declination. So that's not well, I've found that the peak maximum and minimum is more powerful than zero.
Yeah.
So May is zero and then peak maximum declination is July.
So
So
zero declination. Am I tracking those? Yeah, I'm tracking that through the rate of change. Because a
okay.
peak at zero. No, wait. Yeah, at zero declination, the speed of the move is fastest.
Yeah. When it change well when it passes over the is it the sorry, my brain was just the ecliptic or is it going to be the celestial equator?
No, this will be the ecliptic because I'm
The
using
ecliptic, that's what I
geocentric.
thought. Yeah.
Yeah,
Okay.
I'm
So
using
I
geocentric.
find that 0 point to be pretty effective. And
It
so
should be. It
let's
should be.
I think if we hold on, I think it's actually on here. If I quiet these other indicators right now, I think that 0 point is built into, oh, maybe it's not. I thought, oh wait, declinations. There it is. This is the 0 point for Venus here. See this white line?
Yeah.
So that's when Venus tracks over 0 degrees declination. So,
Oh,
it's
interesting.
also correlated to weekly pivots for sure. I mean, look at those. This one's a
Yeah,
little bit
yeah,
off,
yeah,
a few weeks off, you know?
yeah. It should. I think I am tracking that because just like everything else, there are limitations to my current approach, I think. And one of the things that I notice is that it runs on oppositions and squares, but it doesn't. I'm not sure about the trines and the sextiles. I don't think because those in a sine wave it's like 0.66. It's not a peak, it's not a low. It will not correlate that to a higher low. So I think there's some work to be done there because what I thought is, okay, let me split the cycle into its main components. It's like when the sine wave is positive, when the sine wave is negative, that's the opposition. Then the peaks and the troughs, those are the squares. Okay, so I have zero Aries, zero Cancer, zero Libra, zero Capricorn. But what about the trines? I don't I
Yeah.
don't know that a sine wave captures that. So I'm like, man, I wonder if I can do more work on that. I'm still trying to improve it though, even though it for Bitcoin, like for my purposes, for Bitcoin, it's good. I don't
Well,
know why Bitcoin
well,
is so predictable, but it
what
is.
you're talking about though is like you don't want to get too many signals going. Do you know what I mean? Like,
Oh, absolutely.
and I think about that too. The longer I've been trading, the less I trade. And the more I'm patient and I wait for the right trade. Because,
Yeah, yeah.
so if you have a signal that fires whatever, even if it's only every 80 days or twice a year, if it's a really reliable signal, I mean, not to say you can't improve on your model. I'm just saying something to be said for if you have a clear signal,
I agree. I don't actually trade that much. The reason I deployed capital on Bitcoin now is because the macro and the astro models were showing an important low, mostly macro. It's been 4 years since macro models were so bullish prior to the war, obviously. I was like, okay, this is a good opportunity. I'm not really seeing, unless you want to trade on the short side, I'm not really seeing a lot of opportunity. It might be an opportunity to short the stock market second half of the year. I think we're going to see
yeah.
that. I have a very good technical tool to detect when it's rolling over. And I think if I overlay these forecasts on top of that, there's going to be a good opportunity to go short there. But I guess I don't like to go short. I like to buy things. Um,
I'm same. I used to actually when I started out as a day trader like back in 2016,
yeah, me too.
2017.
Me
And
too.
so I used to love to trade both directions. And what I consistently found was as much as I love calling tops, it's so fun and like catching that big move down that I just make more money if I just trade to the long side, which is like statistically,
Exactly.
if you just look at the markets, I mean, it makes
You make more
sense.
money on the long side.
Yeah.
Also, if you go short without leverage, you can only double your money and you have to
Yeah.
nail it up and the thing has to go to zero. Whereas
Yeah.
if you buy Bitcoin at $15,000 and you sell it for 100K, I mean, you made several times your money.
Yeah.
It's like
Yeah.
6x. So it's like you make more money on the long side. So it's better to wait for bottoms, not the tops. There's just, yeah, you're right. They're fun,
Yeah.
but they're not,
It's
they're
very
not, they're not, You're not gonna make a lot of money trading on the short side unless you want to use leverage, and leverage has its own problems.
It does have all its own
Um,
problems. I think leverage, I think, is the number one reason why New York traders blow up their accounts. I,
Absolutely, 100%.
yeah,
I mean,
I did
100%.
I did this whole deep dive on the New York Stock Exchange natal chart, which is fascinating. Just to like give a summary, which is that natal New York Stock Exchange Mercury is conjunct algal. Um, Losing
Really?
your head, right? This
Yeah,
the fixed star algal is the story of Medusa and Perseus, and it's about losing your head, quite literally, right?
yeah,
And Mercury being the ruler of trade, right? Sid is like, so Mercury rules quick trading, fast term, short term trading, but it's
yeah,
sitting in Taurus, right? The New York Stock Exchange natal sun is in Taurus, natal Mercury is in Taurus. Taurus is ruled by Venus. Venus likes investing. Venus likes a fair deal. Venus likes comfort, right?
yeah.
Mercury wants to move quick and make quick decisions and make a fast buck and like, but you lose your head.
You lose your head.
You lose your head, you know?
Yeah,
So the
yeah.
secret to the New York Stock Exchange markets is to lean into that Venus rulership because Venus is also in Taurus and domiciled there. So it's like, yeah, anyway, that's my astrology tangent there.
Beautifully said, though. I mean, I agree. I think it's better to wait. Also, the S&P has um the stock market in the United States, the stock market has this thing called positive drift, which means it tends to go up, which means what two things is and negative something something. I don't remember, I forget what the term was, but basically means this. It falls very quickly, but it spends most of its time going up. So
Yeah,
the best thing to do is wait for a crash, buy it right after.
yeah.
That's how you make the most money. Not really the crash, it's just not even worth it. I tried many times to create like trading algorithms that would go short the stock market. And it's like the conclusion was, well, you can make 10 to 15% very quickly. No, don't use leverage and get out quickly.
Mm-hmm.
So once you're validated and you got your big down candles, get out. Don't overstay
Mm-hmm.
your welcome because this thing snaps back really fast.
Yeah.
And the same thing is true of Bitcoin, by the way. Yeah, the bear markets are brutal, but you could even see it lately since the February crash low. The upsides are just insane. It just goes crazy to the upside. Now we're in a weak, soft period. Technically speaking, we're in the down phase of the 4-year cycle of Bitcoin. Oh, I could show you that one. That's a good model too.
Oh,
Um,
we should totally look at that one because I did the total lunar eclipse series. I don't know if you followed my research on that, but every 4-year cycle low has correlated with a total lunar eclipse cycle.
oh,
And
really?
because the
Well,
total lunar eclipse cycles come every few years, they come in series of 2 to 4. And
uh-huh.
here, I'll show you mine, and then you can share your
Yeah,
screen. And what's fascinating about this cycle? Oh my gosh, these alerts! I'm gonna have to
yeah, they
contact
won't
support.
stop. It's very annoying that they're doing that. Trading View, please don't do that. It's annoying. Don't
Yeah,
try
if
to
you're
upsell
listening,
people
Trading
like
View,
that.
please.
Yeah, seriously, it's so
Okay,
annoying.
let me. So I gotta find that research bubble again over here. Oh, it's on. Okay, great. All right. So, if it's on, why am I not seeing it? Let's turn it off and back on. Here we go. Oh, I see. That's just there should be another one. Sorry, everybody. Hang tight. There we go. Okay. All right, here we go. So this is all of the blood moons, and I'm using Bitstamp because it has the most history that we can see on TradingView. Um,
Okay.
so back in 2011, we had a low on the final blood moon in the series. Here, I'll zoom in.
Yeah, yeah, yeah. It's
Yeah,
I think it's November of
yep,
2011.
yep. It's always within 2 to 4 months of the blood moon, and always 100% of the time has come before the final blood moon in the series. The low has. And so
Huh.
here we had 4 during this bear market here, and the low actually came just before the third one, and then double bottomed near right before the fourth one, and then
Uh-huh.
we had 3 again here in 2018. The low came in about 6 weeks before the last one, but then double bottomed into the second one, or into the last lunar eclipse.
Uh-huh.
And then here we are. This is 2022 or 2021. Third and final was literally the exact week of the low in 2022. So every
Oh,
single
interesting.
bear market low has aligned with the last or the third or the fourth final blood moon. So we only had 3 in this series. Here they are. The third and final one, the low came in just a few weeks before the final blood moon. And
Interesting.
so this research tells me, unless we're going to see a major cycle shift, which could happen because Bitcoin is a young asset, right?
Yeah. Yeah.
Um,
Yeah.
we totally could see a longer bear market emerge, right? But there's a pretty high probability based on this cycle that this is the low. And if you look back at them, though, it tends to chop around for
It
weeks to
tends to chop
months
around and
before it takes off.
retests.
Yep.
Yeah. I'm expecting a retest. I don't think, not now. I don't think a retest happens now.
Yep.
Maybe if it happens in April, that would actually be bullish, kind of. Like if we go back to 16 April, then we got a retest. But not what I'm expecting. I did not know that about the eclipses, but I think somebody on my Discord shared this, and I said, but they were bears. They said, look, the eclipses are bad, and I said the third eclipse seems to be bullish. It seems to line up
Yeah.
with lows, and
Yeah.
this is the third.
Yeah.
I remember
It
saying
is.
that to him and I said, but this is the third eclipse, and look at that chart. The third eclipse is bullish.
Yeah. It
And we're
absolutely
right
is.
there.
Let's see your
Um,
4-year cycle. So
yeah, so this is actually one of the best. This is one of the best models that I have overall, not just for Bitcoin. Although for some reason the Bitcoin models are good. Part of the reason is I will say this, based on my research, the short-term cycles, their alignments change. So usually I run the last 25 years. If I run both. I run the full set, which is 1975 through 2025, and I run 2000 through 2025. Pretty much always, unless it's a long-term cycle, you always get a better alignment and better predictions using the last 25 years. So the correlations are shifting over time, which it kind of makes sense. Markets do not react to the same things all the time. They used to react to like things that don't matter anymore. Anyways, I digress. So so because we only have the training data, train test. What this means is train, it means so from 2023, from March 2023 to the past, this is actually how the model was trained. So take the predictions with a grain of salt. They're not actual predictions. This is what it was trained on. Still, the alignment is pretty good. But I noticed a couple of things in this training. Even though it's training, notice the blue line is training, meaning this is what the model can see. But look what it's actually doing with the planets. It's actually saying, hey, the highs in May of 2021. Go pull up a Bitcoin chart. Actually, the high is in November, but there's a very, very important top on the 14th of April. And this shows that, which is quite remarkable. Then it shows here January 2022 can easily be November. You see how it flatlines here?
mm-hmm.
This for a long-term cycle means that the market is probably rallying during this time. So you see what it's doing here is, even though it's training on this very smooth, very perfect little blue line, it actually is finding intermediate moves where it really shouldn't, but it is. And this is quite remarkable. The training data here also, this training data says the low in the last bull market, the one that just ended this year, the
Mm-hmm.
one that started in 2022, according to the training data, which is what really did, it's the truth that the model can see, but it's actually wrong. It's saying that the low was in May of 2023, but the low was in November. But now look at this, in November, December. Look at this. The forecast says the 11th of December. So
Mm-hmm.
oftentimes with this model, the forecast is better than the reality it's trained on, which
Hmm.
is incredible. And then look at this. It's saying, and forget the dates, this is showing a double top between August of 2024 and May of 2025. This was off by a few months. That's fine. It's a 4-year cycle. It's off by
Mm-hmm.
a few months, but the shape is perfect. This is exactly what we got. We got a December high, a big
Mm-hmm.
crash into the middle of the year. Here it shows the low is in January. This is off by like 3 or 4 months. So this low is actually 3 months later on April 7th. But the shape, it is the shape of the
Mm-hmm.
forecast that I find quite remarkable, because it kind of gives you an idea of what to expect. And then it showed the final high here in May. Final high was actually in October. This was up by 4 months. You add 4 months and you get a perfect forecast. You would not use this to fine tune the data for low, just the shape of the cycle, the shape
Yeah.
of that 4-year wave. And now it's saying the low should be September, which is it's like, yeah, it's the fall.
So that would put us
So
off 4 months into the end of the year, which is like November, December, which is exactly during that Venus retrograde period. I think Venus
Yeah.
stations retrograde in October.
Hmm.
On the 8-year Venus cycle, because that's what I use as a foundation for a lot of my forecasting, we had the Christmas crash in 2018.
Oh,
So
I did. Oh, really?
yeah, that's the kind of event correlation that I think we see at the year end. Not to say we necessarily have a Christmas crash exactly the same way we did, but sometimes it
But we
actually
could.
does shake out that way. Um,
Yeah. I mean, just to show you a little bit more, if you wanted to have the way this tool should be used is for your cycle, okay, we'll have a low in September, but then you would go to this one. This is the 11-month cycle.
mm,
And this uses Oracle. I didn't know that. Actually, no, this is not the best model for this because this one doesn't have the April low. This is the best model. This is a little more, there's a bit more noise here, but this is actually the best model based on my research because sometimes it picks it based on correlations and this is not perfect. In fact, a correlation of 30% is actually super good, actually. Anyways, so we have that September low. So then you would look at these, then you would look at the next cycle in line. And here what it says is July, but we're inverted on this one. So the low could be October, or December. I think these are the 2 days where I would look for a bear market low. October, December, too early for that because that
mhm,
would take this takes us into 2027. So this I expect would be a high, April 2027.
mhm.
So the low would be October based on this. I don't think July will be the low or June will be the low. I think this will be a high based on the oil market. The oil market may get rattled around this time, but
Yep.
based on your research too. So I would expect this to be a top. We are inverted currently. You can see that the forecast is putting a low for October 1st. That was a high. Then it puts
Mhm.
the low for February, late March, February 3, February 4, 5. I think the low is on the 5th.
Mhm.
So you can see how this is super powerful.
It is. This
I
is
am
it's
doing it as a
very accurate.
service, but it's very accurate.
And
It's
that's June.
very
What's
accurate.
that June date exactly? That's June
23rd.
June 23rd.
Yeah. I need to smoothen this line. I think any user would look at this thing going, we see these little, this is the moon. I don't know why it leaves the moon. Actually, yeah, no, I have no idea why it left the moon in there, but it
Oh
should have
yeah, the
removed it.
moon is making those squiggles.
Yeah, it's making the
Yeah.
squiggles. I can smooth them over. I can just say,
Yeah.
please ignore the moon for this cycle. The moon is not causing this cycle. So we can say that that's why I said, when is the high? Where is the high here? Well, it's between the 26th and the February 8th. We know it was in the 5th. And here would be 24th of June, plus minus 10, maybe 15 days with this one. This is an 11-month cycle. I still have to do other kinds of testing and for model selection. Right now I'm using correlation because that's what the AI uses. Correlation is problematic because if you have a high that's 5 days prior, correlation is negative in that period or none. And that's not true. It's actually just a little off. Correlation doesn't capture a little off. So you need to define a little off, quantify it, and then say, okay, this model is good, but it has a margin of error of plus minus a week. Haven't done that yet. Haven't thought of how to do that yet. Because I mean, AI is awesome, but it has zero creativity. So when I suggest improvements, it goes, "Oh, you should do blah blah blah," and I'm like, "No, no, no. That's not what I mean by
No, yeah, it's
creativity,
all
AI."
about like the best indicators, and mine are still pretty simple, but the best indicators I've been able to create, I'm very like I tell it exactly what I want it to do.
Yeah, you need to tell
It's
it exactly what you want.
otherwise it
No, I
ends
will
up
never
back.
design an indicator on it. No.
Yeah, it ends up off in some rabbit hole.
Yeah,
Um,
yeah, yeah. It goes on some rabbit hole. It suggests things that are not like when I say how can we improve this, it suggested a bunch of like statistical methods. Actually, one way to improve it is to add the birth date.
oh yeah. Well,
See, that's the kind of out of the box thinking
I
that it
think
just
that's
doesn't do.
huge. Just based on all my own cycle research, I think that is an absolutely huge cycle shift that if you once you apply that, I'm so excited to see what your data produces.
Oh yeah. I mean, I'm gonna start doing it, but I would ask for your help with birth dates.
Oh yeah,
Oil,
I'll send you any you want.
bonds.
Any you want.
Yeah,
Um,
yeah, no, because I know you work on that. Oil, gold, bonds. I mean, those are. I mean, some of these. Let me show you. Let me before we wrap here. I want to show you something. I think neither of us trade this market. I don't see myself trading the Chinese stock market ever.
Yeah.
But I ran it. I ran the forecast. It shocked me how good it was. I was like, what is this? Some of these models are, look at this. Look at this model. This is
Wow.
training. This is
Yeah,
training
that is
data.
extreme
This this
precision. And
this is testing.
is that using the natal date?
No,
No,
this is
that's
just using zodiacal. So this
okay.
is, look at this alignment. I mean,
Wow.
how can astrology capture it goes up a lot really quickly and then it falls slowly? I don't even know how you do that with planets.
Wow.
But somehow this thing figured out how to do that. It's just
That's pretty
incredible.
incredible.
It is incredible. And it's showing, of course, a top. The long-term cycle shows this is more smooth. Shows the same thing, shows a top. So the Chinese stock market not looking too good. This one too. Again, I don't trade this, so I haven't selected because every one of these has four combinations, and within those four, there's three possibilities. So do the math. There's a lot there. And because I'm picking on correlations, sometimes it's a much, much better model visually that is much more compelling, and it's just hidden because correlation is 30, it's not 34. So then so when I said I need to do some manual work is I produce all the combinations, I let it select, but then I go and see, can this be improved? I bet it can. I bet if I go to, because this is Zodiacal 2006, 2026, I bet if I go to declinations, well, no, there's nothing there. Bad example. Let me go back to Zodiacal. This is probably using the fitted set. No, filter. That's really good. So I could look at this and go, oh, this is better. So I
Mm.
change. These are just ways to isolate the frequency. Fitted, filter, independent. This is methods.
And this is a
Usually I
tool
like
that
this.
someday you want to share. You might make public someday, right? Or
I,
accessible through maybe a subscription service or something.
yeah, I want to make this a subscription service.
Mhm.
Because it's just that good. And this will be just one tab. This will be the forecast tab. There will also be the analysis or cycle tab where you're gonna be able to see the past cycles where they have been, maybe even overlay some of these forecasts on top of the price chart, and probably trading strategies, something like that. And then the big one that I've been dreaming of since forever is that I want people to be able to upload their own data and run the models themselves.
Oh my gosh,
Uh,
that would be very
that would
cool.
be awesome, right?
Oh
That would
my
be
gosh,
awesome.
that would
Thing
be.
is, I have to figure out how to do that because I don't expect people to use the same tool that I'm using. It has so many knobs and dials, things. It's like, no, no, no. I need to come up with like a light version of this, where you give
Yeah.
it data, you say, well, run what you know are the best models. Like for instance, if I know what the best models are for the Nasdaq, and I did, like I said, like I showed you, I have to do some manual work there for calibration.
Mhm.
Once that's done, well, if you want to run it on NVIDIA, I'm just going to give you the Nasdaq's settings. You're going to run it with Nasdaq settings. Because if not, you're just going to go, this is too much. I don't know what to do. And because I have that problem sometimes. I'm like, I don't know what to do. Like three different methods for isolating cycles, different data splits, all of that stuff. I'm just landing on like what usually works. Well, what usually works is I know that if I run it on 50 years of data, a 20-week cycle is going to get completely lost. You may have something good, but then you run it on the last 20 years of data and you're going to have something better using the exact same technique. So you use the same filter, the same planets, the same everything, it will correlate better. So I found that. I know that to be true. So whenever a user comes in and says, I want to forecast Tesla's 20-week cycle, I'm just going to say, well, you need to use declinations for that and you need to use the last 20 years. Don't use everything. Don't use all of these other things. Once that's done, I think by the end, my aim is end of the year. End of the year, I want to have this suite of these tools. I wanted to include trading, but I'm not sure. I want people to use the analysis and trade it on their own. Because if not, if you tell them how to trade, it's like, oh, it doesn't work. I'm like, no, it does. Just please make your own opinions. You
Well,
know?
yeah, I had that's my whole thing. What is there? There's that quote about if you teach a man to fish, he eats for his lifetime, give a man a fish and
Yeah, and then everybody in marketing will tell you, no, people just want the fish. I'm like,
they do
yeah,
want
they want the fish, but then they don't stick with the fish
that's right.
because they think it's no good because they don't trust it because they haven't done all your research. I've
That's
had
right.
that problem because I have subscribers now, and
Yeah.
I have issues with them saying criticizing things about the way we trade,
Yeah.
because I have to for my company. It's like a requirement. I can't just give analysis. I have to give them trades. And the thing is, they criticize things. I like, that's not a problem. But of course, it's well, they're a client. The client
Yeah.
says it's a problem. It is a problem. I can't fix the problem because it's like I know what the problem is. He thinks the strategy doesn't work. What the actual problem is, he doesn't know or understand the strategy.
Well, and
That's the
also
real problem.
execution is one of the most challenging and difficult parts of trading, right?
Yeah,
So, I mean, I think I've heard you even talk about that a lot in your videos. You said this is analysis, like you can know all the analysis, but then executing is a whole nother thing. So a person could read your analysis that is actually perfectly accurate and then fumble their execution completely. And that's not, that's just how it is. So,
that is how it is, unfortunately. So I'm leaning more on saying, okay, if you want trading, I'll give you trading.
yeah,
But you really, really should just use the tools to create your own trading strategy because the
yeah,
difference between following somebody else's trading strategy and creating your own is you trust your own strategy. So you will execute it. If you don't trust the strategy, you won't execute it. And like I said, I've
yeah.
had criticisms. I'm like, that's a feature, not a bug. That's how it's supposed to work.
Absolutely. I mean, that's like the core of the foundation of trading psychology. If you don't trust yourself, if you don't have a system that you've, proven to yourself works, then you're not going to execute it properly.
Exactly. You're not going to execute it properly. And then you're going
Yeah.
to criticize the strategy, but that's your own lack of experience in not knowing, no, the strategy is good. Like, and I've come to realize you don't even need all these. I like forecasts, just like it a lot. Like, my aim for this is to forecast the world and show a race and to forecast things that I will never trade just because I like it.
Yeah.
I'll never trade most of this stuff. I'll never trade oil, for instance. Like, I want the perfect forecasting model for oil. I will never trade it. I just want to be able to forecast it because it helps me with my other things, helps me do my job, helps me have an informed opinion of what's going to happen. I just find it fascinating, but I will not trade it. Um, the thing about trading is there pretty much everything works. Use Fibonacci, you can make a lot of money using Fibonacci ratios.
Yep.
But you need to trust it though.
Yep.
So most things actually, I used to think most things don't work. No, I didn't trust them. Most things work. It's just that you have to trust it and you have to
Yep.
stick with it because you have losing streaks, for instance. With every trading methodology, you have losing
Absolutely.
streaks.
Yep. And the
And
markets are completely uncertain. So you can have a strategy that works 70% of the time. There's going to be that 30% that doesn't work.
yeah, and
And
that
so how do
30%
you,
might be a bad year. It might
yeah,
be
how do you
five
control
five
the
trades
risk?
in a row
Yep.
in 2025. That
Yep.
it's hey, that's the 30% right there. But
Yep.
for anybody joining in 2025, it's like, hey, you lose all the time.
Yeah.
No, I lose sometimes. Um,
We
but
all
if
do.
you're taking 2025, sure, yeah, yeah, all bad trades. Not speaking from
Yeah.
experience, but that
Just
can happen.
hypothetical.
See, and then they don't stick around for when it actually turns.
Yeah.
So when I think about what do I serve customers and clients, I'm leaning more and more on analysis, not because I shy away from trading. No, no, no. I have trading bots. I have half of my trading is algorithmic. I don't even look at it. I look at it once a month. What did it do? I literally trust bots to handle my money. So I do believe in I have trading methods and they work. I also think that most people will never follow them
Yeah.
because they don't even know what it is.
Yeah. Yeah. It's true.
It's a black box, and I can explain it and then over and over again. It doesn't matter. There's no trust, and if
Yeah.
there's no trust, you think it's bad, and if you
Well,
think it's bad, it is bad.
there's all the layers too that come into it is that most new traders come in on like with not enough capital as well, undercapitalized. And so then there's that extra layer of fear of losing your money. I mean, there's just so many like,
Leverage. People like to use
oh yeah,
leverage on crypto, which is like
yeah,
when you're gonna get your head chopped off if you use
yeah,
leverage on crypto.
yeah,
This is insane. I use the opposite approach. I use like right now when I try to pick a bottom, I always have a layer of hedges. Right
yeah,
now I'm long puts. Normally I'm a bit more sophisticated about it, but since I'm thinking the market bounces higher, the cheapest thing is long puts. Um, so what happens there is the more the market goes down, the less Bitcoin I have.
Mm,
And I let just the delta on those options handle how much exposure I actually have. And it's quite organic. And
hmm.
there are no stop losses, and I don't have to look at it. Usually I do more complex structures, but like I said, I flip back and forth between complicated structures and very simple long Bitcoin, long put structures. And that protects my capital on the way down, which that's where I want the protection. If Bitcoin goes high, those puts do nothing to my portfolio. They don't hurt at all. I get almost full upside. I lose about 2% of the entire move, which I'm perfectly happy to give up. But when what right now, I think it went back to it's to 70 now, but at 68, 69, I have a third of my exposure. Just by virtue of having options. And
Yeah,
of course, I created a trading algorithm for that. So maybe one day we'll be a trading bot because with AI, I was able to create a very complicated uh, trading bot with like strike prices and expirations and even how to roll the structure. I was like, whoa,
that's very cool.
this is very impressive.
That's very cool. Very, very cool.
Yeah,
Awesome. Gosh, this has been such an awesome conversation.
yeah,
Covered a lot of ground.
yeah. We got
Do
to
you
do it
want to
again.
tell everybody where to find you?
Sure. I have a YouTube channel. It's pretty small. I just started it. It's called Market Cycle Secrets, and I think you have to add my name, Juan Villaverde. Um, and then I have a Discord. If you really want to get the most of my research, go to the Discord. It's free. There are no paid products being offered by me other than at my company, Weiss Ratings. Of course, if you want to buy my products, weissratings.com. That's where you're going to find them. But there's also a bunch of free stuff. You absolutely don't have to give me any money. Just join the Discord, join the discussion. And yeah, I hope to see people there, and I hope to talk to you soon. We should
Yeah,
have done this long ago.
love to do this regularly. Yeah, that's
Yeah,
and
let's.
the viewers. I think if anybody doesn't know, you can find me in my Discord. I do have a paid forecasting and education service. I do both teaching financial astrology as well as forecasting the markets. And I have you can book a personalized astrology reading with me if you'd like. My email address is or email web address is margoamala.com. And don't forget to like and subscribe this video and turn on the bell notifications so you don't miss the next one. All right, everybody. Bye.
Cheers.